General Electric CEO Jeff Immelt speaks during a news conference in Boston in 2016. General Electric announced Monday, June 12, 2017, that Immelt is stepping down after 16 years as CEO of the iconic conglomerate. Immelt took the helm in 2001 from legendary CEO Jack Welch. John Flannery, President and CEO of the GE's healthcare unit, will take over as CEO in August 2017. The person who holds the top job at General Electric has long held one of the most preeminent positions in all of American business, whether they were statesman-like figures for corporate America, management icons, or advisors to presidents. But the CEO who will replace 16-year veteran Jeffrey R. Immelt come August 1 hasn't yet had that kind of star profile. John Flannery, 55, who has been CEO and president of the company's healthcare unit, has spent 30 years at General Electric, a long-time insider in a company that has long promoted them. But he has been relatively new to media speculation around who might succeed Immelt as his tenure passed the 15-year mark and as GE's stock continued to underperform. Yet Flannery has a broad and diverse background at GE that includes some 2 decades as part of the company's financial arm, corporate experience working on mergers and acquisitions, as well as a successful tenure running one of GE's operating units. He will aim to use that as he tries to win the support of investors, revive the company's long-flagging stock price, and decide how to lead one of the last major conglomerates, a simplified but still sprawling company that makes everything from jet engines to light bulbs. I have a long history of looking at things from an investor's perspective by training and background, he said in a conference call last week with investors, during which Flannery and Immelt mentioned his focus on capital allocation and his background in the company's finance business. So as an orientation and discipline, that's something I'm very steeped in. That could help counter concerns some analysts say Wall Street had earlier in Immelt's tenure about overpaying for acquisitions or overexposing the company's bottom line to financial services leading up to the financial crisis. Much of Immelt's tenure has been marked by a dramatic overhaul of the conglomerate's disparate businesses, divesting things like GE Appliances or GE Plastics, largely exiting the company's finance arm, and making huge mergers or acquisitions in its industrial and oil and gas businesses. But following a top-to-bottom review of GE that Flannery has promised, there could be more to do. If there's a need for further portfolio optimization, Flannery has as good a handle as anyone on how to do this in GE's business, said William Blair analyst Nicholas Heyman, who has an outperform rating on GE's stock. Heyman described Flannery as a pragmatic, well-respected guy, noting his performance at GE Healthcare, where he jolted organic revenue growth from around less than 1%, he said, up to 5% in shorter than 2 years. That pragmatism was on display during an interview last week when Flannery said of GE's stock price, which has lagged competitors and market indexes, that it's fair to say none of us are happy with the price right now. Asked about his plans to further reshape GE's business, he stuck to the basics. What investors want is growth, margin, and cash, he said. That's what we're focused with on the company. Jack Brennan, GE's lead independent director, said in an interview that Flannery's combination of operating and investment skills, the ability to think like an owner and operate like an industrialist, were a big part of the choice the board made. John brings a set of financial skills and a mindset around returns and returns on investment that is very strong.